Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
It's a fairly okay start, if you could call it that, for the Asian markets.
25,331 is the support, 25,669 is the resistance.
The intention here is to wrap up the IDBI Bank stake sale as early as October.
Whether we're a bit too early or a bit too late is irrelevant. We've written our research and we think that the end result is a disorderly collapse.
Unfortunately for Viceroy, they are just 2 years late on this stock.
85 points on the sensex, 83,600 is where the sensex is at.
FIs have more options to invest in, and the earnings growth back home in the US is huge.
So expect a muted quarter from TCS. Now, if we look at the Nifty levels, we are way below that 25,400 mark as well.
The Finance Ministry is considering a fund of 32,000 to 35,000 crore rupees, for which an approval will be sought from the cabinet and the government.
The markets today below that 25,400 mark, in the red. Midcaps falling a little bit more, and all eyes on TCS results today.
Well, that was the day so far. Hello and welcome to Closing Bell. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, and in a bit, a couple of my co-anchors will join in as well. Well, the markets have been a little bit sluggish today. At one point of time, we were down to 140 points or thereabouts, but we recovered from the day's low. So that 25,300 mark at least has got defended as of now. Tech has come off the low point of the day. So that's one index that, has recovered considerably. TCS, remember, comes out with a set of numbers. Let's see what they'll, come out with, because as of now, expectations are not very, very large. So that's going to be important. And the Nifty Bank as well, yet again, taken support at lower levels and popped up in trade. That said, individual stocks, well, they're doing a thing of their own. Case in point being a Nykaa. That stock, in fact, is up at around the 220-odd mark. So good up move is what we've seen. For this week itself, I think Nykaa has seen a very good move. India Shelter was another stock, I think, that has been seeing good amount of delivery-based buying. It made a fresh high, yesterday itself. And today as well, it had popped up in the green. Last two trading sessions, India Shelter is the stock that I'm talking about. That after the kind of run that we have seen, fund-based action being seen, good delivery-based buying, and she's a little bit optimistic on prospects from here on. That as well is up 1.5%. And JTL, another one from the broader markets, that's popped up in trade. They're talking about expanding capacity by around 300,000 tons. That'll be a high margin business as well that they're looking at. So that explains why that stock is up 3.5%. And if you pull up a 1 week time horizon on the stock, that as well has seen a good recovery. I think it's done a quick 10 to around 15% move on that particular name. Well, that said, let's get in our, our expert, Mitesh Thakur, who joins us. Mitesh, a lackluster trade, you have to say. Directionless, waiting for a trigger. Maybe it comes from President Trump. Maybe it comes from, the result season itself. But the markets are lacking that trigger. The good news is we're defending lower levels. What's your view? Do you think the markets first want to go ahead and correct a couple of percentage points and then pull back? Or do you think for the timing you look to gradually add on to long positions?
Nigel, I think the idea is that the Nifty, has been very kind of in a contracting mode, and that still remains. If you look at the last about 7-8 days of trading data, we have had highs and lows within this range of 25,580, 600. Sorry, about 25,350, give and take 10 points. So broadly, it's a market which is contracting, and therefore no directional bias is developing on the Nifty. In fact, the volatility indicators are all flat. So I'm still not sure that we'll have some directional bias in the coming few days. What can happen is that there are some moving averages around this 25, 200, 250 zone. So we might test them. But again, till we don't close below them, these levels, I think, I would not be really looking at a corrective kind of a move. So I'm presuming that the markets will be still consolidating and will be in this contracting phase. On the stock side, and we've been trading with more of stock-specific prices, Paytm is something, which has caught my eye. Good breakout here today. So I would recommend buy here with a stop below 924. Look for a target of around 975 to begin with. And the other one stock is on sell side, which is PI Industries. recommend selling here with a stop just above levels of 40.90 and look for a target of around 39.60.
Got it. Okay. All right. Thanks a lot for that, Mitesh. Well, let's go across to Ria. I think she's standing by. She's here to tell us about Bharat Dynamics. The stock is in focus after Motilal Oswal note. Ria, tell us what's in the detail.
Well, yes, Nigel, today Motilal Oswal has come out with a note on Bharat Dynamics. They've initiated coverage with a neutral rating and a target price of rupees 1900, which is a 4% downside from yesterday's closing price. Now, the brokerage has noted that BDL's revenues have been impacted in the recent past, largely due to supply chain disruptions and also challenges in sourcing critical components, particularly from Russia and Israel. But now they believe that these headwinds are beginning to ease out and they expect a sharp recovery going ahead. They're expecting a revenue CAGR of about 35% over FY25 to FY28. Margins are also seen holding steady in the 24 to 26% range, while operating performance is also set to pick up meaningfully going ahead. EBITDA and PAT are estimated to grow at a CAGR of 64% and 51% respectively over the same period. Now, apart from this, the report has also highlighted a strong order book visibility with an existing order book of about rupees 22,700 crores and an order pipeline of 50,000 crores going ahead. And this is including large deals like QRSAM and the upcoming emergency procurement orders as well. Now, on the macro front, the company is well positioned to benefit from favorable defense sector tailwinds, be it the rising global defense spend, growing exports of Akash missile systems, or the ongoing collaborations with DRDO. That said, valuations do remain a sticking point for the company, currently trading at 70 times the FY26 estimated earnings, and hence they suggest waiting for a better entry level for the stock. So on the back of this, the stock has been under some selling pressure today. And apart from this brokerage note, there is another piece of news flow. A report from a Brazilian news agency, the Rio Times, earlier this week revealed that Brazil has dropped their plans to buy air defense missile systems, which is the Akash missile systems from India. And they're now negotiating with Italy for a more advanced system. And this is according to official government sources. So on the back of this, the stock is trading lower by around 4.5% today.
Got it. Okay. All right. Thanks a lot for that, Ria. Bharat Dynamics, not too dynamic in today's trading session. Devin Choksi, MD at DR Choksi FinServ, joins us on the show. Devin, good afternoon. Good to see you. And as always, defense stock, right? You can't keep them out of the radar, either for good or, for not so great things. The pathway is clear. There's plenty of potential for all these companies. India-focused production is going to be something that the street is going to be looking forward to. And defense spend is going up, not just in India, globally as well. What's your view on Bharat Dynamics? The stock's under pressure post that note, but will you be looking at this dip to get into?
Yes, good afternoon, Nigel. Well, I think everything is in price today. If you look at the trail P is about 125.26 for this particular stock. So valuation is fairly scaled up. Even if you have to assume the growth, and I think based on the growth, I think we provide, the rationalized P. Still, we are talking about 60-70 times price earning ratio on the growth itself. In my viewpoint, I think the higher amount of growth is definitely expected. But at the same time, I think the valuations are scaled up. Probably the upside gets limited, at least in the near term. Unless we see some kind of a price correction, I think we will not be able to justify this kind of valuation. Having said that, the fundamentals of the business remain absolutely convincing. I think one is sold completely onto it because government is spending big time money onto it, on the defense orders, etc. And at the same time, I think some of the export markets have also opened up for many of these companies. So in my viewpoint, I think while the fundamental story remains intact, I think the valuation is one thing which one will have to be mindful about.
Got it. All right. Devin, what about the capital market plays? What do you make of them? BSE from the highs has corrected close to 20%. NSE in the unlisted market as well. It saw a big run, pulled back a little bit. And today we had, the Metropolitan Stock Exchange MD, who was sounding very optimistic. She was talking about 10 to 12% in the cash market, something that the BSE as well hasn't done after so many years. What's your view on the stock exchanges?
I think in a way, this kind of disruptions are required in the industry. I think one segment of the market was probably overriding the entire capital market segment itself. And as a result of which, I think the lopsided derivative market, either with BSE or NSE, I think has been creating a disproportionate situation, which was not in the best interest of the market either. as such, I think I believe that I think in the near term, there is going to be some amount of impact on the volume. But over a period of time, I think the volumes will get rationalized. I think the participants will start coming back into the markets. And I think I don't see too much of a problem on that front. So maybe, yes, I think with the scaled up valuation, these companies are having some amount of price correction, which may be natural at this point of time. But overall long-term prospects, I remain distinctly convinced about the growth prospect going forward for the all intermediaries, including the stock exchanges.
Just one factor, and Surabhi has joined me as I promised that my co-anchor will appear at some point of time, and she has. So we are just looking at the BSE data, the average turnover per day on the option side, that's back down to the January 2025 levels. So we've seen a sharp pullback, the Jane Street fiasco that's playing out, various other regulations as well in place. So after moving higher, I think it's down close to 30% from the recent averages. So that's the kind of volume dip we've seen on the BSE. And I'm guessing it's across exchanges as well.
No, absolutely. And this is exactly what we were discussing on Editor's Playbook this week. In fact, do check it out. It'll be available on CNBC-TV18 Access soon enough. And on the Playbook, we were talking precisely about this. All this regulatory action, the talk of losses in the retail segment, 91% people losing money, plus the whole Jane Street episode, and the tightening regulations. In the last 6 months, since regulations started getting tightened, both NSE and BSE, overall options premium has been coming down. And it's coming down at an individual trader level as well. So definitely some sobering effect seems to be playing out. But just to complete the point, Devin, you said that you think long-term, the story is still intact. Which would be the one or two capital market stocks that you like the most?
See, I think the number of demat accounts are likely to increase. And I think that is where probably our eyes are on both CDSL as well as NSDL. In particular, CDSL, because I think the retail focus of CDSL is much higher. So I think that is one play, which is something looking very interesting from an investment perspective. Of course, I think in the near term, price is already reached. So obviously, you are not getting too much of headroom. But if market gives correction for a variety of reasons, then in such situation, like some CDSL could be, a good choice to add into the portfolio. And subsequently, I think if the stock exchange prices are also coming down, then also I think it would be a good opportunity to buy, because we believe that this particular breaks which have been applied on the option is basically trying to rationalize the markets. Should that happen and the segment players, I think, find the niche, I think they will come back on the volumes. So we remain relatively more positive on the prospects going forward.
Okay. All right. So positive on stock exchanges as well as on CDSL. Got that. Actually, we'll stick with the financial space and now talk about some of the power financier stocks. Both PFC and REC have been up and about in today's trading action. They were up 2-3% last time I checked those stocks. Gaurav is joining in. There's a Morgan Stanley note that is sounding a little optimistic on this space. Gaurav, tell us more.
Well, yes. Power financials, it seems that they haven't lost their charm yet, because now Morgan Stanley has initiated a note. For PFC, they have given a target price of 508 rupees, and for REC, they have given a target price of 485 rupees. For the last few years, what we have seen is that if we compare the performance in the last 9 months, the performance have been underperforming if we compare it with the past data. And that is the reason why they are now initiating with a note saying that from here on, the companies can grow at a loan CAGR of 12% on a year-on-year basis. And this can also translate into ROE somewhere in the range of 17 to 19%. Considering all these factors, even if we look at the valuations, now Morgan Stanley believes that the valuations are in a favorable terms. And the reason being that company have been showing a very stable asset quality. They have been paying dividends somewhere in the range of 4 to 5%. And at the same time, even if we consider 12% loan book growth, it seems that the risk reward is compelling, and that is the reason they have initiated with overweight rating. As a result, when we look at stock performance, both the stocks are up in trade today. So definitely a positive note coming up on power financiers from Morgan Stanley, and stocks are also reacting positively on that.
Got it. Okay. All right. Thanks a lot for that, Gaurav. Devin, you heard him. PFC, REC, they went out of fashion for a little bit, but then they come back. What's your take?
I think the entire power story remains absolutely sold, completely, convincing for the next 5 to 10 years. Government is again, the main spending organization in building the entire power infrastructure, both the generation as well as the distribution infrastructure. And in my viewpoint, that's where these two companies are definitely, emerging stronger. Because on one side, the new projects are coming up, they are lending money. They are buying money at a relatively cheaper cost. They are lending at a reasonably high growth rate. I think between 12 to 14% kind of a CAGR growth rate in the AUM is, I think, being expected. And at the same time, valuation-wise, if you look at it, 1 to 1.2 times kind of a price to book value ratio is something which is not expensive for this kind of businesses. So when you are looking at the business, I think from a stability point of view, I think this is a time probably I think to buy into some of these neglected ones into the portfolio.
Got it. All right. I wanted your view, Deven, on Vedanta. But let's run you through the details first. The question is debt still a concern for listed entity Vedanta Limited or its parent Vedanta Resources? Well, Viceroy Research, they certainly raised eyebrows with the explosive allegations. But Vedanta's rebuttal is clear. They are saying that this is just propaganda. Interesting to see what exactly is the truth. But for the time being, let's just focus on the numbers and break it down for you. Vedanta Resources, the parent company, well, they've reduced their debt by over $4 billion in the last 3 years. Earlier, it was at around $8.9 billion. It's down to around $4.9 billion. Now, that's quite a bit of deleveraging that they've done at the parent. The company has said that they're not stopping there. They've already guided another $3 billion of debt reduction in the next 3 years, out of which $1 billion is done. What's better and what's more positive is the way that they've brought down the average bond coupon by around 250 basis points. They've also stretched the maturities all the way to 2034. That's good. Now let's focus on Vedanta Limited. We were already talking about Vedanta Resources, now Vedanta Limited. Despite of the big capex that they're undertaking, the debt actually has declined to around 53,250 approximately as of end of last fiscal. And more importantly, leverage is at its lowest we've seen in the last 9 quarters or so. The net debt to EBITDA at around 1.22 times. That's pretty good. The company is also guided for $5 billion of cash flow pre-capex. That's in the near term. The street as well is hoping for dividends in the vicinity of around 20 to around 25 rupees per share in FY26 and FY27 as well. That'll be good for the shareholders. It'll be even better for the promoter entity because promoter entity gets majority of the dividend. So Vedanta Resources can then service its debt. So the question is there smoke? Maybe. But is there fire? Maybe not. If the management actually walks the talk and the demerger clears the regulatory hurdles, which is going to be very important, the market may just start looking past, the past controversial legacy of the company and instead focus on the fundamentals, which could look up from here on. I, in fact, questioned Mr. Gabriel, the co-founder of Viceroy Research, who had come out with that report, and also Rakesh Arora of Go India Stocks. This is what both of them had to say.
Vedanta Limited, let's say, it doesn't have the capacity to cover the interest costs of Vedanta Resources. So whether that will create an event of default, or whether the possible impairment of billions of dollars of Vedanta Limited's assets will lead the creditors to call that debt, that's anyone's game. We're here to report it. Whether we're a bit too early or a bit too late is irrelevant. We've written our research and we think that the end result is a disorderly collapse. We think that Vedanta Limited has been overly promotional in the ability of its business and the ability of its operating assets, which that have been largely overstated.
Are you done with the report, or will you have more reports coming out on Vedanta?
Oh, we have more.
Unfortunately for Viceroy, they are just 2 years late on this stock. Vedanta Resources already delivered quite a bit from around $9-10 billion to around $4.5-5 billion now. And now servicing that debt is not a challenge at all. Number two is that, Vedanta itself has gone through this whole exercise of demerging, and all the lenders have looked at individual entities on their leverage, on whatever the liabilities are. And clearly, they've approved this. So clearly, all the entities are self-sufficient. Otherwise, this kind of approval cannot come from lenders. Vedanta stock is largely dependent on aluminum outlook. And aluminum outlook has been pretty strong and doesn't look to be weakening anytime in future. They are also getting a little bit more of backward integration in form of bauxite mine, coal, their own captive alumina. So things are looking better only for them. So I don't think fundamentally there's any reason that performance would deter. Vedanta has been has done phenomenally well actually in the last 2 to 3 years. Meaning, if you had asked me in 2021, I would not have been able to gauge this kind of turnaround that the management has been able to achieve. And things are only getting better from here.
Okay, two opposite views out there. Vaishra suggesting that at some point of time there'll be a default. Rakesh Arora suggesting that this report would have been valid actually a couple of years ago, but they've got their house in order. The stock actually has recovered considerably from the low point of the day yet again. Deven, which side of the argument are you on? We know the promoter entity has a sketchy past, but how much of that is in the price? You know, and reports like this, when you have a biased position, it's very interesting to see the kind of action you see post that. Your take?
In fact, I think each and every business is, be it zinc, be it aluminum, be it oil and gas, I think they have been cash-generating businesses and a significantly large cash-generating businesses. The debt coverage also, I think, is reasonably under control compared to anybody else, I think, in the world that you may want to look at it. I think they are probably in one of the best metro cycle that I think one is talking about and likely to be in a better cycle, I think, that we're talking about. Debt cost is coming down. They are repaying their debt. They are never defaulted in the payments. I think this company deserves to be once again de-rated because I think the valuation-wise, if you look at this company, on a trail basis also, I think the company is quoting at around 11, 12 times price-earning ratio. I think EV/Taiwan is compelling. So in my viewpoint, I think the business-wise, this company deserves to be re-rated. Demerger is an overhang. I think once that gets completed, in my viewpoint, I think individual parts would probably start showing up significantly large valuations at some point of time. So we remain committed, I think, on investment, and we believe that I think it's a wait, I think, for the time being for selling this kind of a company from the portfolio.
Okay. That is Vedanta making it to the headlines today. Well, the market's down 90 points, so the move is decidedly lower this afternoon. That's what we're seeing. The mid-cap index is also lower by about 0.3%. So range-bound, but we've been grinding lower now in the second half of the week over Wednesday and today. That's been the story. Mid-cap index relatively better. It's trying to bounce from the lows. Let's see how it plays out. Well, Deven, we'll let you go on that note. Thank you very much for joining in and giving us your perspective on all the themes that we've discussed. Let's take a quick break. We'll come back on the other side, keep tracking the market, and we'll also have Pathik Gandotra joining in with some views. Welcome back. Well, the market continues to grind lower slowly. It's not a big fall or anything. The last two sessions, they have been, that just a very slow decline. Pathik Gandotra, partner at Drone Capital Advisors, is with us. Pathik, thank you so much for joining in. Good to have you on the show. So what do you make of things, first of all? What resilience? A decent run-up through April and May when all the tariff news was coming through. And now we've gone into a bit of a slumber zone. Or basically, it's just, a bit of a logjam. Do you expect this time correction to last longer? Could it become a price correction? Or do you expect a quick turnaround again to the highs?
No, so I think it's in a wait and watch mode because obviously the news that is hitting the markets is mixed. On one side, interest rates are falling locally, and that's going to bolster credit growth and good for interest rate sensitives. On the other hand, there is mixed news on the tariff front, where although your deal, our deal is still hanging in abeyance, but a lot of our competitors in exports have been hit with much higher duties. So obviously that to a certain extent helps us. So there you are there. And also I would like to say that the way at least currently, the way the duties the US has imposed, it appears that all the smaller countries which cannot actually bridge the deficits with the US are being penalized or are being put to higher duties, and which is where we have a sustainable advantage if they use this method of calculation. So whatever our number comes, I think eventually we should be in a good place.
So
I think market is sharing that. I'm sorry, I'm saying market is sharing that optimism, and that's why it's holding on.
Correct. All right. So government exports is something that you continue to bet on, right?
100%.
Yeah. And what about EMS plays? That's another segment. I think a few months ago or so we had discussed there's plenty of potential. Some of the stocks have done very well. Is there a longer roadmap for them?
Of course, there's an extremely long roadmap for that because EMS as a business, India is gaining, from doing small assemblies, we're trying to do more work in-house, and more work is getting done in India, and the margins and the value addition that the Indian EMS companies are doing is going to increase. The TAM is extremely large. The point is, as you said, stocks have run up to multiples which are fairly aggressive. And so you might go through a time correction, I don't know, months, years, I can't say, but eventually earnings will catch up, and then you have obviously the long growth ahead. So, or all of these companies get into some more areas which are extremely high growth, and then the multiples sustain. So one of the two things will happen, but for the time being, I guess a lot of the run has already happened, and it's time for a healthy correction, either in price or time.
Pathik, you in your initial comments, you spoke about the central bank here in India cutting rates. So various ways to play it. You either play the real estate players, you play the housing finance companies, or you play other beneficiaries like the NBFCs, because the cost of borrowing itself, will go down. It will help them in terms of growth as well as some cushion on the margins. How do you play this theme? Because RBI clearly is in the mode to push up the economy. They've made the intent very, very clear, and we've already got a couple of rate cuts.
Correct. So more than the rate cuts, there's also plenty of liquidity in the system.
Yeah.
That obviously helps borrowing costs of people who borrow wholesale, and which is where NBFCs borrow wholesale. And so you see that getting reflected into NBFC stock price. Now credit growth is picking up, but it has still not picked up to the level which the RBI and obviously we expect. That might take a bit of time. But the point here is that market always prices things ahead of time. So the issue is the NBFCs are a very good place to be. Housing finance companies, I would go for more of middle income housing kind of companies. Those are companies which are doing well, affordable housing kind of companies, where the growth is still stronger than the basic housing loan growth. Those are interesting plays. Real estate, of course, there has been a recent sluggishness in the past. I think that's got a bit to do with the uncertainty in the markets as well. And so once the market stabilized, I think real estate is a fairly medium-term story where you can get interesting companies.
Okay. Got that. Pathik, in this earnings season, obviously the hopes are also pinned on the consumer space. Mass level consumption, whether it is through QSR or whether it is staples, FMCG, etc. What has your positioning been here? I mean, most people in the market have been underweight, but now it seems that there are like hopes really rising.
There are a few one-off of plays here and there, but otherwise, consumer companies are still fairly expensive, and the growth, even after the revival, is not strong enough to justify the multiples at which they are trading. So yeah, they might give positive returns from here on, but I think they'll be better and stronger plays than those. So I would be extremely selective in the consumer space.
What about IT services? When we're starting off the earnings season with TCS today, obviously we all know that they're expecting revenues to fall, constant currency revenues. So unlikely to be a very hot quarter. Do you like anything in technology?
Again, that all these things depend upon the way the India-US relations work out, and the growth in the US itself works out. Because if the whole tariffs that the US is put in turn out to be inflationary, and the US consumer bears them, it'll have a ripple effect down the economy, and which might hit growth somewhere. And that's the problem. That's the problem with IT services. So that is it's too early to say. I would obviously, given the fact that the growth, I don't think the market also expect very strong growth in the next few quarters. I think the sector is best left to neutral or slightly underweight, what I would say.
All right, got it. Pratik, what would your allocation be today? Give and take the uncertainty globally. Earnings could be a little bit softish to start off with. For the year, though, the hope is low teens growth. Give and take that, what kind of equity allocation would you do if you had, some allocation strategy? How much would you deploy to equity? How much would you hold on to? And if you're looking at other safer havens, what would the split be?
Look, we manage our own capital, so it's almost 100% equity at all points in time. Although we have taken some cash and put some investments in gold. That's been one of the things that has happened last year. About 8-10% of our portfolio we put into gold, and so that has done well. But apart from that, we don't sit on cash for very long. There are always lots of ideas available to buy, and so that's where we are. So this is as good of a risk-averse thing that I will do. That some 10 to 15% of your portfolio could be alternate assets like bullion.
So Pratik, to recap, what do you like the most in the market now?
Exporters, without any doubt, like all exporters, which I think will do well because I think what's happening here, if you see, is there is an FTA signed with the UK, there is a FTA being planned with the EU, which actually will be again a game changer, and the US trade treaty will work to some. It may not be as favorable as we think, but will not be as punitive as it was on April 2nd. So some midway compromise could be reached, which will still be positive for India because the other countries are getting taxed at much higher rates. So all the three big markets are open for you for a very, very long term. So exporters, I think, are the way to go. That's where one should have a very decent allocation, is what I would say.
All right, Pratik, appreciate you joining in. Thanks a lot. We look forward to chatting up with you. Hopefully, by the next time we do chat, we'll have some clarity on the global piece. But as you've told us, exporters is something that you like. Good chat as always. Well, time to slip into a short break. But on the other side, Nimesh is waiting for us. D-Street Chatter will fill us in with regard to what's going on in the markets as well as individual stocks. And technical experts will join in as well. They'll tell us a couple of trading calls. Don't go anywhere. Welcome back. You're tuned in to Closing Bell. We are coming to you live from the CNBC-TV18 Motilal Oswal newsroom. Well, that said, Nimesh is standing by to help us out with an insight into dealing room. Well, Nimesh, directionless, waiting for that trigger to play out. Market still in the band. Tell us, what are you picking up?
Absolutely right, Nigel. It's been a very, very narrow range for the markets in the last couple of days. Basically on a couple of things. One, there are no fresh triggers for the markets, and also there is a lack of institutional support. If you look at the institutional data for the last many days, X of block deals, it's hardly any participation coming in from the institutional investors, both FIs as well as JIs as well. Even in today's market, it's quite mixed with a bit of a negative bias. But I guess the selective buying in PSUs continues. So that's one space which has seen a bit of interest from large institutions. One day you'll see OMCs. One day today you're seeing the power finance companies doing good. So that rotation continues. But PSU is something where there is a bit of flavor and a bit of interest as well. I think the street is going a bit nervous into the TCS earnings. Most of the IT stocks are down. The index is down 1%, and there is generally a concern about how the earnings are going to pan out for the IT companies. So a bit of nervousness ahead of the TCS earnings. So that's going to set the tone for the IT stocks. But relatively, broader markets have actually been outperforming in the last couple of days. It's not showing up in the index, but there are a lot of individual stocks which are buzzing on a daily basis. Even today, there are so many stocks which are up 5, 7, 10%. And the breadth also suggests that there is a bit of momentum in the broader market stocks. It's the Nifty and the Bank Nifty where there is a lack of participation and lack of trigger, which means that we've been pretty much range bound in the last many days.
Okay, so that's the overall market sense. Nimesh, what about individual stocks? What's buzzing today? What's in news?
Well, the first stock on my list is GMR Airports. That's been buzzing for the last couple of days, and it's backed by good institutional buying. I understand a couple of large long-only funds have been active buyers in the last couple of days. And remember, for GMR Airports, there was an order, a court order, which was supposedly positive for airport companies like Adani Airports as well as for GMR Airports. So we've seen that bit of playing out in terms of institutional buying there. The second stock is Jyoti Structures, a small stock. We normally don't talk about it. Yesterday the stock was up. Even today the volumes are on the higher side. But I understand, interestingly, one very large influential HNI investor has been selling out of Jyoti Structures in the last couple of days. So that's a trigger there. The third stock is IKS. We saw a large block a couple of weeks back. Again, there is an indication of a large block coming soon in IKS. So that's the third name. And the last is Varun Beverages. We saw a couple of upgrades as well coming in of late. But periodically, there has been selling from larger institutions into Varun Beverages. So expect, even in today's market, expect high delivery volumes on the sell side in Varun Beverages.
Got it. Okay, all right. Thanks a lot, Nimesh, for joining in and helping us out with that neat list. Mitesh Thakkar is back with us. Mitesh, you've got a couple of trading calls for us. Please go ahead.
Nigel, I have a STBT on Bajaj Auto with a stop at about 83.10 for targets of 82.20. And there was stock of this power finance company. So REC is on the BTST list. Keep a stop below levels of 395. Look for target of 402.
Okay. All right. Got it. Thank you very much, Mitesh, for all the trading advice today. You have a good rest of the evening, and we'll catch up again with the markets tomorrow. Now, as far as this evening goes, it's going to be a busy one because TCS kicks off the Q1 earnings season. And it's expected to be a quiet quarter for the IT giant because constant currency revenue growth is expected to decline 1.4% quarter on quarter. Rima's here with the detailed expectations.
So as you rightly pointed out, expect a bit of a muted quarter. Dollar revenue growth is seen up 0.6%, but constant currency revenue growth is expected to decline by nearly 1.5%. The reason you're seeing such a disparity in the dollar revenue growing and the constant currency declining is on account of the currency move. So there's been a sharp depreciation of the US dollar versus some of the other currencies like the pound, the euro and the yen, and that explains. But in constant currency, that's the main number that we watch, expect a decline of nearly 1.5%. Margins are likely to be flat on a sequential basis. Remember, this time there were no wage hikes. Typically, the company gives wage hikes in Q1, but on account of the uncertainty, they had deferred it. And the reason why the revenue is expected to be weak is because compared to the prior few quarters, the BSNL contract is ramping down. And the question that analysts have on the margins is that as this BSNL contract ramps down, and BSNL had low margins, some analysts estimate just single-digit margin. So then why aren't the margins expanding? Because our poll throws margins to be on the flatter side. Now, what will you watch, the growth X of BSNL, the international growth, because analysts say that despite good deal wins, the growth has been pretty muted for the international business. Secondly, timing of the wage hike because it was deferred from Q1. And thirdly, the deal wins.
Okay, and of course, you'll catch all the action with the TCS top brass, of course, being led by Mr. K. Krithivasan, CEO and MD of the company. The action starts at 5:30 p.m. Of course, that's the press briefing. The numbers are expected any time after 3:30 p.m. That's TCS in focus. Let's move on now. We've got another sector that we're looking at, and that's housing finance. There is a Bernstein note that's putting the spotlight on housing finance companies. We've got Gaurav back. Gaurav, tell us what's Bernstein saying. Do they like any stocks?
Well, yes, Bernstein is being a little bullish on housing finance stocks, specifically Home First Finance, Aptus and Aadhar, because they have initiated with outperform rating. And the reason being that in this pack also, they have actually given outperform rating to Home First Finance because they believe that the company has ability to consistently replicate its operating model across the segments, and at the same time, because of the smaller size, fastest growth and superior productivity, they actually prefer Home First Finance. Other than that, for Aptus, what they say is that the company has high share in the fixed rate loans, and that is the reason why in an environment where the interest rates are falling, this company can actually gain in trade today. Other than that, Aadhar is also in focus, and the reason being that what they're saying is that company has largest and most geographically diversified portfolio, and that is the reason why they like this company. On the other hand, let's also talk about Aavas and PNB Housing. They have actually initiated with market perform rating in these companies. For Aavas, what they're saying is that company actually lags its peers when it comes to yields and profitability, and that is the reason why they have initiated with market perform rating. And for PNB Housing, they have initiated with market perform. The reason being that even though they like the business, how they are actually diversifying into small ticket size loans, but the aggressive expansion is something that they are concerned about, and that is the reason they have maintained their market perform rating. All in all, on the back of the note, we are seeing good traction in all these stocks. So definitely watching out on these counters in the coming days as well as how they perform for investors.
Got it. Okay, all right. Thanks a lot for that, Gaurav. Let's focus on the insurance space. The June life insurance data has been largely a mixed bag. Yash joins us to fill us in with some details on that front. Yash.
Well, of course, Nigel, as far as the sector is concerned, it's a mixed bag which has come through in the month of June. But, a special mention to one company which has been consistently performing. And in the month of June, also the performance has been very, very strong in terms of numbers. No matter what parameter you look at, the numbers have been very strong. And what makes it better is that the strong numbers have come on a very strong base that was in June last year. The company that I'm talking about is Axis Max Life Insurance or Max Financial Services. Very strong numbers on a strong base, as I said. June new business premium collection grew by 21%. First quarter premium collection grew by 22%. June total AP, that grew by 25%. And June retail AP also seeing a growth of 22%. For HDFC Life, modest growth, but on a strong base. June business premium collection down 6%, first quarter growth at 15%, June total AP growth at 8%, June retail AP growing by 12%. ICICI Prudential Life, the growth has been weak in the month of June. And, the disappointment is that weak growth has come on a favorable base which the company had. So June total premium collection growing by just about 4%, first quarter growing by 6.5%, June total AP growing by 11%, but the retail business is what is hurting the company in the month of June. June retail AP that has contracted by 10%. SBI Life, it's a healthy growth on a strong base which the company had. June new business premium is down 13%, but the first quarter premium growing by 3%, June total AP growing at 10%, and June retail AP growing at 14%. Finally, LIC, it's a weak growth for the company in the month of June and on a modest base. June new business premium, that is down 3%. First quarter premium up just 3%. June total AP down 9% and retail AP growing by just about 2%.
Okay, all right. Thanks a lot for that, Yash. Well, Finance Minister Nirmala Sitharaman called on NBFCs to significantly scale up their role in the financial system. Speaking at a conclave, Sitharaman said NBFCs are no longer shadow banks, but systematically significant entities. Let's listen in to what she had to say.
You should aim to reach at least 50% of the total volume disbursed by scheduled commercial banks. Not a big number, considering in the last 4 years, you've doubled 24 became 48. You can do it even now. So, as India moves forward, NBFCs will have a key role, no doubt, in meeting the credit needs of the future, including in areas like green initiatives, affordable housing, and MSMEs. To reach, and the reach that you have is the biggest strength that you have. By 2047, at least 50% of NBFC credit should be directed towards high growth and high impact sectors. NBFCs, I want to tell you in front of the Department of Financial Services Secretary, you're no longer shadow banks. The stronger regulations and oversight is the best testimony. The stronger regulation and oversight is the best testimony of your importance in the financial system and the broader economy.
Okay, all right. That was Finance Minister speaking about NBFCs and their role in boosting lending, to larger extent. Well, Amrish Baliga is joining us on the last leg of Closing Bell today. Amrish, good to have you on. Actually, since we were just playing out those sound bites, you tell us, NBFC stocks, what would your favorites be?
NBFC, I really don't have too many favorites because I still feel that on the retail end, there could be more sort of NPS coming in. I think that should be a pain area for most of the NBFCs going ahead. So I would be a bit careful at this point of time. Whereas when it comes to banks, yes, I'm clearly positive, both on the PSU, the large cap banks, as well as the private sector, the larger ones.
All right, Amrish, but normally when you join us, you give us that one stock that you're looking at. And this time it's from the auto ancillary space, Sona BLW. Tell us the rationale of that.
See, that's a leading automotive technologies play with, which actually designs, develops, and manufactures highly engineered automotive systems and components. About 74 OEMs, they are the customers. That's across India, Europe, US, and China, and both electrified as well as non-electrified powertrains. 11 state-of-the-art facilities in India, US, Mexico, and China. About 39% of the revenue comes from EVs and 20% is from hybrid. So basically, it's a future-ready model, a de-risk model. And they had taken over Escort's Kubota railway equipment division, which is basically a leader in railway brake systems. So this is one diversification which they made. Q4 revenue was flat. The margins were also maintained, but the stock had corrected. So I think that's an opportunity. Looking at the strong order book position, which is about 24,200 crores, in which EV-related orders is about 80%. And among the fastest growing auto ancillaries, that CAGR expected about 25% over the next 3 years. And now clearly diversifying into other areas. I think one of them clearly is the components for humanoid robots. I think that's a large opportunity going ahead over the next 4 or 5 years. So expected EPS for FY27 is about 14. And with this, my target price is about 624.
Got it.
Okay. Amrish, by the way, we were just discussing Bharat Dynamics, where there's a Motilal Oswal note. They like the stock, but they're not too comfortable with the price, which is why their price target is lower than where the market is, the CMP is right now. Overall as well, defense stocks are cooling off. Today is a day of correction in defense. Would you use the dip to buy anything, or would you stay away given the valuations?
Well, see, if you look at the defense space for the next 5 years plus, I think most of the stocks should be quoting at much better levels than where we are today. Maybe, you can easily be getting about 20-25% sort of CAGR returns. But then, is it the right price to get in as of today? Because, due to the geopolitical issues which I have seen in the recent past, the sentiment had turned extremely positive for the defense stocks, and most of them have run beyond their fundamentals if you see from the current point of view. So I would surely wait for a correction. I think a decent correction may not be as much as what we had seen from, in 2024 and early 25. But then I think we can see a correction of either 10 to 12% move from here. I think that should be a good level to start getting in.
All right. The macro trigger for the Indian economy as well as the markets is that India actually has de-risked itself with regard to the oil price spike. Given the kind of subdued oil prices, what's your view on the OMCs? Input cost for them is soft, so good for their margins. We have state elections that are a few months away, so all probability the margins could remain healthy, even if in case there is a couple of hikes that come about. So we'll have to see how that goes. But what's your view? Valuation's okay? It's a tactical play. Anything can take place. But do you like them?
See, clearly, I think oil prices are on the way down. And we are still getting better levels because of the Russian oil, which clearly is positive for the OMCs because, what we are seeing on the retail price level, we have not seen any changes at all. And I don't see any changes happening, at least in the near future. In the sense, I don't think there'll be any downward revision of the retail prices. I think the only joker in the pack is the excise duty. Because we have seen excise duties being increased when the prices have fallen, especially when the oil prices have fallen. So I think that's the only joker in the pack. But in case there are no excise duty hikes, I think it's extremely positive for the OMCs. And even at these levels, I think one could be looking at buying something like a HPCL and an IOC.
Okay. All right. Got it. We have to take a very quick break. Amrish, stay on. We'll come back and then get more on the markets with you.
Well, the expiry-related move actually is to the downside. The Nifty is now moving closer to the low point of the day, 25,350. Defending that. By the way, we have some comments that are coming out from Mr. Anil Agarwal. The AGM is on, and they have, we have managed to source a few highlights from there. They're saying that demerger is on track. They remain committed. Last year, in fact, it delivered record numbers. This year, it's looking even better. Stock recovering a little bit from the low point of the day. That said, let's get you some global opinion then. Few voices carry as much as weight as Jim O'Neill, the economist who coined the term BRICS. Earlier today, we spoke to Jim and asked him about Trump's tariff on BRIC nations and the talks of de-dollarization. Let's hear him out.
each time Trump says something about the BRICS, I'm both amused and even more confused than I am when he talks about many other topics. I sometimes wonder whether he actually really knows who's part of the BRICS and who isn't. In my judgment, the BRICS haven't really done anything. So I'm not sure Trump's statement ultimately is going to mean one thing or another of any great relevance, other than the fact it gives the BRICS greater attention, which I would have thought is the last thing that Trump was trying to do, or should have intended. But such is the strange world of life under Donald Trump. The whole idea that the BRICS countries can realistically jointly develop some alternative currency to the dollar just doesn't really make much sense whatsoever. I've spent much of my professional life developing my years during the build-up and the creation of the euro. And everybody knows the difficulties that European countries went through, but it ultimately, of course, required them to abandon their own domestic monetary policies. The idea that big BRICS countries are going to abandon their central banks for some kind of joint initiative on currency, it's like some kind of fantasy Netflix movie, really.
Okay, that is a view from a market veteran. Jim O'Neill, he's seen many markets, many cycles over the course of many decades. So that was an interesting conversation. By the way, as we're closing down on a quiet day, slightly negative day, Glenmark Pharma is still retaining that 5% gain. Amrish, Ekta was earlier telling us the market seems to be getting excited by one of the new drugs that is in their pipeline. It's a cancer drug. It's going through clinical trials. So maybe there's some excitement there. But I don't know, do you look at Glenmark? Do you like anything else in pharma?
No, in fact, Glenmark, we have had a look, no doubt. But then the stock has already moved up decently well. I mean, it was around 1,400 levels. From there, we have seen an extremely good move to 900 plus. So at these levels, maybe, from a trading point of view, yes, possibly we could see some more momentum up. But for an investor, I would say possibly wait for a while. Maybe levels closer to about 1750, 1725. I think that should be the level to get in. But among the others which we have been suggesting is still continues to be Lupin at this point of time, and Dr. Reddy is the second one.
Amrish, what about IndusInd Bank? It's holding with a gain of 1.5% at 650. Hindsight says that it was a good buy, but at 850, what is it?
I mean, most of the stocks are good buys. I mean, when you have the advantage of the hindsight. But IndusInd, at this point of time, I would just possibly wait and watch. Let us see as to who the new CEO is. And as and when the person comes in, at least for the next 1 or 2 quarters, there'll be a decent amount of cleaning up happening. So I really don't see a major move, at least for the next 2 to 3 quarters. But then post that, yes, I think once all these things happen, we'll have to take a fresh view at that point of time. But right now, as an investor, I would possibly stay away for a while.
Okay. All right, Amrish. Just stay on. We'll quickly go through the market close.
Just one word, Surbhi. TCS. That's the one you should be looking at. The street is sniffing something, something. Numbers are not expected to be good. Take a look at the stock price. Currently at the high point of the day.
Suddenly they're supposed to be good.
Sniff.
Sniff, sniff.
So let's see. Pre-positioning basically is taking place. That said, it's almost, the end of the trading session. So let's wind down then. A bit of an expiry-related move towards the last half hour of trade, where the Nifty saw a bit of a pullback. And that's why, in fact, we ended closer around the low point of the day. At the start of the show, in fact, the Nifty was down only 70 points, going home with a cut of around 120 points. What lost out? Bharat Dynamics came in for some profit-taking. That was down 2.5%. You had Asian Paints down 2%, HDFC Life as well. Keep in mind, all these three names actually have been relative outperformers in the recent past, but today they came in for profit-taking. What did well? Tisco, that did well. Tata Steel was up close to under 1%. You have Innocent Bank, that was up 1.5%, and Maruti Suzuki as well did pretty well. From the broader markets, then what did well? You had Lloyd's Engineering Works. That one continues to move from strength to strength, up close to around 7% even in today's trading session. So solid up move is what we're seeing out there. Sagility, I think there was an upgrade that came in from IIFL, or there was an initiating note coming in from IIFL. So that stock, in fact, was up close to 3.5%. You have JTL Industries. They've announced a capacity expansion. The stock continues to go with its good form. So that stock is well 3.5% higher. And Jyoti Structure is only a 20 rupee name, but in the last two sessions, it's moved from 17 to around 20 rupees. Nimesh told us a large seller is gradually getting out of there. So maybe most of the selling getting absorbed.
You know, beyond the headlines, actually, a fair